Hello everyone, welcome to the Gyan Kosh. Today we have many important things to cover. We will cover in the shortest possible time. Okay, so it is about current affairs of current important news of September for RBI. Okay, first news is that RBI has established a regulatory review cell in the Department of Regulation with effect from 1st October 2025. What it will do, it will institutionalize a systematic internal review of all regulation every 5 to 7 years. Okay, may not come, but yes, one cell is formed effective from 1st October 2025, and it will just review all the regulations every 5 to 7 years. Okay, for that particular purpose, one advisory group is also formed, okay, of external experts. It will help in stakeholder engagement, etc. things. So the chairman of that group is Sri Rana Ashutosh Kumar Singh. Okay, he is currently MD of SBI. Okay, uh, one state finance secretary's conference was held. So just remember the name of the theme was journey towards economic prosperity through the path of fiscal consolidation. Okay, then this topic is very important. Revised liquidity management framework. Okay, so first of all, yesterday we also read that operating target of monetary policy is overnight weighted average call rate. Remember this thing. Okay. Then policy corridor. Yesterday we covered this point that on the top is MSF, which is repo plus 25 BPS. At the bottom is SDF, okay, that is repo minus 25 BPS, and repo is in the middle. Okay, repo is 5.5%, MSF is 5.75%, and SDF is 5.25%. Okay, it is called as policy corridor. RBI's objective regarding WACR alignment. So RBI will endeavor to align WACR to the policy repo rate, that is 5.5%. Okay, yes. What change was made in the main short-term liquidity operation? So earlier for short-term liquidity operation, 14-day VRR or VRRR was used. Now they will use mainly 7 days VRR or VRRR, but it has discretion to use other overnight rates like 14 days VRR, variable repo rate, and various reverse repo rate they may use as per their discretion. So from 14 days they have shifted to 7 days. Okay, but option of 14 days is still open with them. Okay, yeah. Now for these particular operations, RBI will give at least 1 day advance notice, okay, about the tenure, quantum, and timing. Okay, again they can do it on the same day also if the situation warrants. So in both the cases, RBI has the option to do like 14-day operation also, or as well as without giving any advance notice if the situation requires so. Okay, but in general they will do 7-day operation, and they will give at least 1 day advance notice. Okay, so these operations are for short term. There is a concept of durable liquidity management. Okay, durable liquidity for the tools are OMO, open market operations, long term VRR, that is beyond a fortnight, and forex swap options. Okay, forex swap auctions. Okay, so these are normal things. One concept is there in case of open market operations, if RBI buys government securities, obviously it will inject durable liquidity. It will buy something and it will give money for that. Okay, so money will flow in the system and it will inject liquidity. Similarly, if RBI sells government securities, it will absorb liquidity. Okay, now in this revised liquidity management framework, daily CRR maintenance thing is given. Okay, yesterday we have read that CRR requirement is 3.75%. Okay, so 3.75% of NDTL, that is net demand and time liability, that bank must keep with RBI in cash, like, okay, or in liquid things. So it will be kept mainly in cash and it will not fetch any interest. Okay, it will be kept under section 42 of RBI Act. So this 3.75%, banks are required to maintain average CRR of 3.75% of their NDTL from the reporting fortnight. Okay, so bank can what can do, they can just on the fortnight they can like make the balance at 3.75% and rest of the time they can reduce it. So to stop it, there is also a condition that bank must maintain at least 90% of prescribed CRR on a daily basis. Okay, so it is daily maintenance requirement under revised, it is unchanged like last time also with in the old LMF framework it was also the same. Okay, this thing we have covered. Yeah, SDF access limits and timing. Okay, so SDF is this is drawing depositing facility, standing depositing facility, deposit facility. So no cap, any amount banks if they want they can deposit with RBI. Okay, the window is from 7 p.m. to 11:59 p.m. Okay, and in case of MSF there is a condition that bank may draw against excess SLR holdings plus up to 2% of NDTL outstanding at the end of the second preceding fortnight. Okay, and again it is available daily from 7 p.m. to 11:59 p.m. Okay, now about inoperative and just hold on. Yeah, so here we were. So now it is about inoperative and unclaimed deposit scheme for facilitating accelerated payout. Okay, so first of all, this unclaimed deposit, what it is, like if a balance are not operated for 10 years or any amount is unclaimed for 10 years, it must be transferred by the banks in the Depositors Education Awareness Fund, which is maintained by RBI. Okay, so DEA, this fund. Okay, so now suppose there's a amount lying in that account and it is just lying there. Okay, so now RBI is encouraging banks and other stake banks to make all the accounts operative and to transfer the amount lying in the unclaimed deposit account, DEA account, to their original owners. Okay, just banks have to find out who are the original owner of the bank, that bank account, and they have to transfer the amount. Okay, to encourage banks to reactivate inoperative accounts and return unclaimed amount lying in the DEA fund. Okay, this scheme is launched. Okay, so what is scheme duration? So it is for 1 year. You have to remember the tenure also from 1st October 25 to 30th September 2026. Okay, so bank, why will bank do this all the exercise? Anyways, they have too much of work. So for this, they differential payout to banks will be given. Okay, so there are some slabs. up to 4 years अगर अकाउंट इनऑपरेटिव है तो 5% ऑफ अमाउंट और 5,000 विच एवर इज लेस. 4 to 8 years 6% or 10,000 which ever is less. 8 to 10 years 7% or 50,000 whichever is less. So 5, 10, 15, 5, 6, 7. Okay, and duration is up to 4 to 8, 8 to 10. These three things will be inoperative accounts. Okay, after 10 years it will go to unclaimed deposits. Okay, in that case limit is 7.5% to 7.5% or 20,000 whichever is less. Okay, remember the limits also, remember the tenure also, and DEA is maintained by RBI. Remember this thing. Okay, then it is about operational things, that how and when banks submit their claims for the payout, they have to do it on quarterly basis. Okay, and within 1 month from the end of the quarter, and RBI will pay them within 30 days from the submission. Okay. Then launch of microsite for banknotes. So one new website is launched by RBI. It is called indiancurrency.rbi.org.in. Before that, Paisa Bolta Hai was the microsite. Okay, so nothing to remember. Just in this website, 360-degree views of banknotes will be visible. Like if you can go on the website, you can check the notes from 360 angle view. Now, constitution of payment regulatory board. Okay, so one payment regulatory board is formed under section 3(2) of Payment and Settlement Act. The main thing is it is chaired by governor. You have to remember this thing. Now the supervisory data quality index for scheduled commercial banks. Okay, so SDQI, it mainly has 4 dimensions: accuracy, completeness, timeliness, and consistency. It is all about the quality of supervisory data submitted by the entities to RBI. Okay, so it measures these things in from ACTC, 4 of these dimensions. Okay, so there is improvement in June, and there are various slabs. I have not written it. So below 80 in June, no one was there. So everyone was in a normal condition only. And total 87 scheduled commercial banks were covered by this. Okay. Now, returns. Department of Payment Settlement. Yes, CISM is a thing, centralized information management system. Okay, so Department of Payment and Settlement System returns to be reported in CIMS for the reporting period August onwards. Okay, which returns: internal banking return, mobile banking return. Both are monthly, and up to 7 of the succeeding month they have to upload on it. Okay, so other returns are also there on CIMS portal. These are the 2 new returns which have been added. So, master direction on regulation of payment aggregators. It is actually a very big direction. So, we have covered only important things. Okay. So, to whom these direction apply? So, all banks and non-banks entities undertaking payment aggregator business. Okay, and AD banks and scheduled commercial banks engaging with PA, like anyone who has connection with PAs, these directions will apply. Okay, and what is payment aggregator? Like with name you can understand that payment aggregator will aggregate the payment. Okay, so suppose any merchant's interface is there, suppose Amazon is there, you are paying on Amazon. So for it will aggregate the payment and from all the customers and transfer the amount to Amazon. Okay, just for example, an entity that aggregates customer payment to merchants via one or more payment channels through the merchant's interface, physical or virtual. Okay, and settle the collected funds to merchants. And not this one more term is there, payment gateway. So both do the same thing, like both take payment from the customers and give it to that merchant, but in case of payment aggregator it also handles the fund. Okay, and settles to merchant, while payment gateway doesn't handle the fund, it directly transfer it to merchants. Like category of PA's questions may not be asked, but there are 3 categories: PA physical, PA cross borders, and PA online. Okay, um, some limits are there for which these 3 terms will be used. So you may have to remember the like category name of the categories. So do bank needs authorization to carry out PA business? No, bank do not require any authorization. For non-banks, they have to apply to RBI. Okay, and yes, if any regulator, if the particular entity, non-bank entity, is regulated by any other financial regulator, then it has to take NOC, no objection certificate, from that particular regulator, and thereafter taking NOC within 45 days, they can apply to RBI. Okay, for authorization. Um, yes, it is the most important part. Minimum net worth application and subsequently. Okay, so at the time of application for payment aggregator, net worth should be 15 crores. Okay, and it must reach 25 crore by the end of third financial year from grant of authorization. Okay, and be maintained on ongoing basis. This is a thing from which question can be asked. And what are the forex dealings restrictions for PACB? PACB means PA cross border and per transaction cap. Then PACB cannot buy sell forex with any entity other than authorized dealer. For forex transaction, mostly authorized dealers are the only person to whom like we can do the transaction. Okay, so in most of the cases, authorized dealer will be the person. Maximum per transaction value will be 25 lakhs rupees. Okay, so 25 lakhs or less. And all the amount payment aggregator which it receives from the customer, they have to keep in a separate escrow account opened with the scheduled commercial bank in India. By when must the escrow account instruction be implemented? By the 31st December 2025. And these are some other things like in which currency can each account be maintained. So in escrow account, domestic INR, in this inward and outward cases, INR, and like these are two detailed things. If you want, you can read. Otherwise, like I'm going to the next topic. There are many topics which we have to cover. Now this RBI authentication mechanism for digital payment transaction direction. Okay, authentication, you also know, everyone know OTP or like PIN or fingerprint. Okay, so these directions will apply from 1st of April 2026. Okay, all transactions are covered, like all the digital payment transaction will be covered by these directions. Okay, what is the factor of authentication? Customer credential use, like can be password, SMS, OTP, PIN. Okay, fingerprint, biometrics, anything can be there for as a factor of authentication. What is 2FA rule? Two factor authentication. Okay, at least two distinct factors of authentication are required for all digital payment transaction unless exempted. Okay, and what is dynamic factor? Like in case of like it is saying that two distinct factor, from these two distinct factors, like for digital payment other than card present. Okay, in case of card, you may just swipe the card and put your pin. Okay, but for other transaction than card present, at least one factor of authentication must be dynamically created and be unique for that transaction. Like one password is there and one OTP will come. Okay, OTP will be dynamic, it will be a new OTP every time. Okay, that will be called as dynamic factor. Okay, then we come to the next topic, that is WMA limit for Government of India for October to March 2026. Okay, so for Government of India, limit of WMA, that is ways and means advances, is decided twice a year. Okay, so now what is WMA? It is actually an important topic, so we'll go little deeper in it. So WA is mainly to meet the temporary cash flow mismatches. Okay, remember, it is not for long term deficits, it is only for temporary cash flows. Okay, so RBI section 17 subsection 5 enables WMA. Okay, it is for less than equal to 90 days. Okay, for 3 months government can take WMA from RBI. Okay, like one figure was given in the annual report of RBI that WMA was used for 8 days in 2024-25. Okay, so in 24-25 WMA was used for 8 days. Okay, and even 23-24 it was for 20 days, but it was old figure. You have to remember, for 24-25 it was used for 8 days. Okay, now there are 3 forms, okay, of financial accommodation which is available from RBI to states. Okay, so these are, one is SDF, it is called as special drawing facility. Then is WMA, ways and means advances, and the third is OD, overdraft. Okay, so in case of this, SDF is collateralized and these two are uncollateralized. Okay, so in case of usage, first of all, state government have to utilize SDF, then WMA, and then overdraft. Okay, in case of WMA, it is available to state governments at repo rate. Okay, then comes OD. Okay, OD has, like, in case of OD there are two things. One is if OD is within 100% of WMA limit. Okay, OD is within 100% of WMA limit, then rate will be repo plus 2%. Okay, and if OD exceeds 100% of WMA, then rate will be repo plus 5%. Okay, and again, this, if some state or central government has taken WMA and for like 3 months. Okay, and in case due to some reason that it outstanding persists beyond 3 months, then rate will be repo plus 1%. Okay, and one more thing, that in general, one committee name is there, Sudhir Srivastava committee. Okay, this committee has devised the methodology to make out this WMA limit for states. For central government, RBI and central government decides it, but for states, like 3 years average expenditure data and all, everything is used to devise the limit. Okay, and name of the, remember the name of the committee for this methodology is Sudhir Srivastava committee. Okay, so in case of government of India, October 25-26 limit is decided as 50 crores. Okay, when will RBI initiate fresh market borrowings? If the WMA limit is once 75% of WMA limit is utilized. Okay, then RBI will initiate fresh market borrowings for the government of India. Okay, can RBI revise the WMA limit during a period? Yes, it can do it. Okay, and it has flexibilities. And what interest rate applies to WMA and overdraft WMA? At repo rate, and overdraft at repo rate plus 2%. Okay, then investment by state cooperative banks and central cooperative banks in shared service entity established by NABARD. Okay, so for this SSE, shared service entity, that RBI has given the approval. Okay, so it was proposed by NABARD. Okay, it is intended for state cooperative bank and central cooperative banks. Okay, it is up to their wish, like voluntarily they can join it. Okay, they have to subscribe for its capital. Okay, and remember the limit. What is the cap on the state cooperative bank and central cooperative bank investment in the SEC share capital? Is it is up to 5% of the owned fund, that is paid up capital and reserves. Okay, the investment in SSE is exempt from SLR requirement and non-SLR requirement. Okay, prudential limits and other things are not there, they are exempt. So now we are moving towards the current affairs of August. Okay, so what is retail direct scheme? I think everyone must know that this is a retail direct RBI retail direct portal is there, and now app also is there. It is a portal enabling retail investors to open gilt account with RBI and buy primary auction and trade GSECs in secondary market. Excuse me. So it was launched in November 2021. गवर्नमेंट सिक्योरिटीज खरीदने के लिए it is a platform. Okay, even for both in primary as well as in secondary market. What new functionality has been introduced? So now there is an option of auto bidding for T-bills. Okay, so covering investment and reinvestment. So now even SIPs can be used, can be done in case of government securities, since auto betting is included. It is a new feature, and that mobile app was launched in May 2024. RBI has granted approval for AU Small Finance Bank. Now, AU Small Finance Bank is a universal bank. Okay, it is a so last year we had to remember many things about the limits. Even now it is important because one license is given. AU Small Finance Bank name is itself important. That can be asked in the examination, and some requirements are there that it must have scheduled status in the schedules of RBI, Schedule 2, and satisfactory performance for more than equal to 5 years. Shares must be listed in the recognized stock exchange. Minimum net worth should be 1,000 crores as on the date of the previous audited quarter. Okay, CRA requirements must be met. Net profit in the last 2 financial years, and this gross profit, gross NPAs and net NPAs should be like less than equal to 3% and 1% in the last 2 financial years. So some figures are for 2 financial years. The satisfactory performance for 5 years. You have to remember it. Okay. So it is it. Now next topic is investment in government securities by persons resident outside India through SRVA. Okay. So now first point is, what is SRVA? What is Special Rupee Vostro account? First of all, just understand the concept of Vostro account. Vostro account is a foreign bank's account held with an Indian bank denominated in INR. Okay, so Vostro, it is like foreign bank's account held with Indian bank in INR. Similar to this, there is a concept of Nostro. It is actually opposite to it. It is an Indian bank's account held with a foreign bank, okay, in foreign currency. Okay, so now you can understand the SRVO. SVRO is a designated Vostro account. Okay, it is a designated Vostro account in foreign currency, designated Vostro account for rupee based international trade settlement under RBI's framework. Okay, so it is mainly used for international trade settlement. The main key is international trade settlement. Okay, so you can ask when Vostro was there, so what is the requirement of SRVA? Okay, so Vostro was for general banking. Okay, and SVRA was SRVA was specifically created for facilitating international trade. Okay, similarly, surplus use, in case of surplus use, in case of Vostro, ideal funds can be used for very limited purpose. Okay, but in case of that SRVA, surplus can be invested in central government securities or T-bills also. Okay, it is about that only. What has RBI permitted? Person resident outside India maintaining SRVA for INR trade settlement may invest rupee surplus balances in central government securities including T-bills. Okay, effective date you need not to remember, it is from 2025 August. Again, about international trade settlement in Indian rupees. Revision in SRVAs. So now AD category banks may open SRVAs for overseas correspondent banks without RBI prior approval. Okay, so in fact just we are promoting this SRVA account because it helps in internationalization of rupees, and export promotion will be more. So now the next topic is introduction of continuous clearing and settlement of realization in check truncation system. Okay, as of now this settlement is from batch processing. Now it has been changed to continuous clearing. Okay, with settlement on realization. So it settlement will be T plus 0 also in this case, like within hours that checks can be cleared. Okay, so in CTS now it has been changed to continuous clearing from batch processing. Okay, and it will be implemented in two phases. Phase 1 is like 4th October, and second phase 3rd January 2026. So by January 2026 it will be fully functional. Now the free AI committee report. Okay, so what is free AI? Just remember the full form: framework for responsible and ethical and enablement of artificial intelligence. Okay, framework for responsible and ethical enablement of artificial intelligence. Okay, one committee was constituted by RBI to guide about responsible and ethical artificial intelligence adoption. Okay, so it gave 7 sutras, core principles, a unified vision, and 6 strategic pillars. So in case of 7 sutras, all the positive things, whatever you can imagine, will be there: trust in the foundation, people first, innovation over restraint, fairness and equity, accountability, understandable by design, safety, resilience and sustainability. Okay, and uh, dimensions are innovation enablement and risk management, and it recommend for shared infrastructure. Okay, now we are coming to July 2025 current affairs. Okay, so one RBI prepayment charges on loan direction 2025. Okay, so coverage is all commercial banks excluding payment banks. Those who know about payment banks can understand, like payment banks cannot anyways provide loans. Okay, in India payment banks are not permitted to lend no loans, no credit cards as per RBI's licensing policy. Okay, and even that acceptance of demand deposit, they have some limits, like current and saving accounts they can accept up to 2 lakh rupees per customer. They can revise, limit can be revised by the RBI. Okay, and all India financial institutions are also covered. So mainly what are like prepayment charges? If someone is repaying its loan, then in general prepayment charges are there. So RBI is changing the rules, and it will affect all loans and advances sanctioned or renewed on or after 1st January 2026. So it is not like that these directions were effective from 1st January 2026. Then even for the prior period loans, it will apply only from the loans and advances sanctioned or renewed on or after 1st January 2026. Okay, so there are many limits, but just broadly we will read. Baki you can take screenshot and read. Floating rate loans to individuals, non-business purpose, all reporting entities, prepayment charges are not allowed. Okay, then there are separate limits, for business purpose and individual MSE, micro and small manager enterprises up to 50 lakh rupees. Even small finance bank cannot levy prepayment charges. Lock-in period for all regulated entities not reporting, regulated entities, no minimum lock-in period should be there. This thing you can remember. Excuse me. This is also important. You have to remember the name also. About it is all about Basel III capital regulations. So we have read that risk weight for credit risk like yesterday. Okay, so it is about Basel III risk weight for credit risk and which credit ratings Indian banks are allowed to use when they follow the standardization approach. Okay, until now, what is the condition position as of now? Until now, the foreign claims, for foreign claims, banks could use ratings from 3 agencies: Fitch, Moody's, and S&P, to map a borrower's rating to a regulatory risk weight. Okay, तो जहाँ पे भी फॉरेन क्लेम्स हैं वहाँ पे बैंक्स कैन could use ratings of these 3 agencies. Okay, now RBI has permitted this Care Edge Global IFSC Limited also. ठीक है. The RBI circular adds this organization Care Edge Global IFSC Limited. ठीक है, it is based at IFSC. Banks may now also use this agency's rating for claims on non-resident corporates when the exposure originates at the IFSC. Okay. And risk weights in general for other agencies, I don't know whether important or not, but for this particular agency, since it has been given license recently, you have to remember risk weights of this agency, or like AAA 20% risk weight. Like it is a rating category. Like if some particular organization rating will be like this, if rating is AAA, risk weight will be 20%, AA 30%, A 50%, triple B 100%, and BB and below 150%. Okay, just remember these 5% also. Okay, now again one more direction about lending against gold and silver collateral. Okay, it is also launched in these directions came in July only, in June also. So comply as soon as possible, not later than 1st April 2026. Okay, loans sanctioned up before adoption continue to extend guidelines. ठीक है. Eligible collateral will be jewelry, ornaments or coins made of gold and silver. Okay, so no loans against primary gold, silver. Okay, or in any other form than jewelry, ornaments, coins. So gold bar and all these things won't be available in this. Only jewelry, ornaments and coins. Like in case the collateral for credit assessment is required when total loan amount against eligible collateral to a borrower is about 2.5 lakhs. Okay, so as limit is there 2.5 lakhs, you have to remember this thing. Okay, or bullet tenure for consumption loan capped at 12 months. There are two kind of like consumption and for like furtherance of income generating activity. Okay, for bullet tenure for consumption loan is capped at 12 months. Okay, now the weights again important. Weight caps is also there. In case of ornaments, aggregate pledged per borrower, gold up to 1 kilogram and silver up to 10 kilograms. And in case of coins, aggregate pledged per borrower, gold up to 50 grams and silver coins up to 500 grams. These two limits you have to remember. Okay, and in case of we have ornaments and coins. Okay, but in case of jewelry, weight caps above applied to ornaments and coins only. Jewelry not listed under caps. Okay. Now that valuation for these particular, like if bank is taking any gold, so what will be the price of the gold, like how will it measure it? So for reference price, it will be lower of 30 days average of closing price for that specific purity or preceding day closing price for that purity. Okay, whichever is less. Okay, this price is published by Indian Bullion and Jewelers Association or a SEBI regulated commodity exchange. Okay, now LTV, it is a loan to value. Okay, consumption loans maintained throughout the tenure. Okay, so what is this LTV? It is mainly outstanding loan divided by value of pledged collateral. Okay, so maximum LTV, like if total consumption loan amount per borrower. So if amount is equal to less than 2.5 lakhs, then maximum LTV, loan to value, will be 85%. Okay, if it is between 2.5 lakhs to 5 lakhs, it should be 80%, and more than 5 lakhs, it should be 75%. You have to remember the figures. After release payment, release after payment, sorry, whenever the payment is made to the bank, then it has to release the gold on the same day, but not in any case later than 7 working days after full payment or settlement. So maximum limit is 7 days. Okay. Now RBI citizen charter. Okay. So what is a citizen charter? It is mainly a RBI citizen is a public time bound service pledge. Okay. That tells people what services RBI provides, how fast it will be provided, and through what process. Okay, it is a citizen charter. Okay, so now it consolidated all services into single citizen charter with a total of 204 services. Okay, it is effected from 1st July 2025. Okay, and like a channel count of services example, so not much useful. Yes, this Prava, this you have to remember. It is platform for regulatory application, validation and authorization. Okay, so Prava is the RBI's primary online portal for receiving and processing regulatory applications or requests from regulated entities like banks, NBFCs, etc. Okay, like if some bank needs license, authorization, approval, exemption, post approval, everything will be done through Prava portal. Okay, and it is also, yes, it is mandatory to use with effect from 1st May. So all the regulated entities must give any request through this Prava portal only. Okay, and like if normal public wants, it cannot go RBI through this Prava. It is not a public grievance portal. For that, we have to go through RBI ombudsman, etc. from those routes. Okay, now this RBI's financial inclusion index. Okay, it is also important as a like it rose to 67 from 64.2 in financial year 24. Okay, 67, it is round figure, it will be easy to remember. Okay, there are three main parameters. Okay, access, usage and quality. Highest weight is of usage, then access, then quality. 45%, 35%, 20%. Remember the percentage also. Okay, reflecting deeper financial usage and improve service quality. Okay, it was introduced in 2021. Okay, consolidating data from sectors like banking, insurance, investment, pension and postal services. Okay, initiatives like Jandan Yojana have played a key role in its betterment. Okay, now RBI capped investment by regulated entities in AIF, alternative investment funds. Okay, so just remember, collectively regulated entities can invest 20% in an AIF and 10% individually. This limit is from 1st January 2026. Okay, if a regulated entity invests over 5% in an AIF with downstream exposure to its own debtor, excluding equity, it must make 100% provision for that exposure. Okay, too many things, not finding so important. So now from July 16 2025, so mainly from July 2025, all government payments above 75 crores must be processed through RBI's e-Kuber platform. Very important. Earlier this limit was 500 rupees crore. So with it more transparency will be there. Okay, real time tracking will be there, since like amount is reduced. So all these payment above 75 crore will come under the it will be easy tracing for any transaction. Okay, some other important news, this priority sector, actually that entire circular is very important, this priority sector lending norms, but the one in general everything is included in on the 1st April circular. Okay, or direction of RBI for PSL norms, but this was added later on, either I think May or June, that in case of small finance bank, earlier the limit of PSL was 75%. 75% of their amount they have to they have through advance in for PSL sector. Okay, within this 40% amount was some subsectors defined by the PSL direction only, and 35% they can do as they want, like they had flexibility. Now that 75% overall PSL target was reduced to 60%. Okay, and like out of these 60%, 40% is fixed, which is given as per the direction. Okay, and only 20%, like earlier it had 35% flexibility for 35% advances. Now it has flexibility for 20% advances. Okay, so overall PSL target cut from 75% to 60%, and that flexible bucket was reduced from 35% to 20%. Okay, now RBI has recognized FIMDA as self-regulatory organization. Okay, in financial market regulated by RBI. Okay, so there are some conditions which are important. First, it must be a non-profit company with a minimum net worth of 10 crores. Okay, remember the figure, minimum net worth of 10 crores, and diversified shareholding, not a single entity holding more than 10% of the paid up share capital. Okay. One Guwahati based small finance bank was there, Northeast Small Finance Bank Limited. Okay, it has been renamed to Slice Small Finance Bank. Okay, just remember this thing. Reserve Bank on April 2025 launched initiative Connect to Regulate. Okay, it aims to broaden the involvement of members of public and other stakeholders in policy formulations. Okay, and to take another proactive step in direction of making regulatory environment more consultative. Okay, so connect to regulate में like you can connect to RBI, okay, for making regulations better. Okay, so it is mainly a consultative platform or initiative. Now NPCI has raised UPI limits. Okay, so from 15 September it is the latest thing. User can now transact up to 10 lakh rupees in 24 hours for specific merchant transaction. So there are two type of transaction, person to person and person to merchant. For person to person limit is 1 lakh only. So you and you can transfer to your friend only 1 lakh rupees, but person to merchant it has been raised to 10 lakh rupees. Okay. Again, it is not correct here that it is aggregate limit for the entire day for 24 hours. Okay, or it is per transaction limit. Okay, so you have to remember that only. So for 24 cumulative limit 10 lakh rupees, per transaction limit 5 lakh rupees, like different categories. At least remember jewelry, that 2 lakhs and 6 lakh rupees, because it is like a kind of odd one out. Other limits also you have to remember. This you can take screenshot and do the remaining things. So that's all for now. All the best for the examination. Thank you.